My dear friends, welcome to Raja Sekar classes. This is lecture number 22. In this lecture, we will try to understand key ratios used in fundamental analysis of stocks. What are the key ratios? First one is profitability ratios. Second one is liquidity ratios. Third one is efficiency ratios. Fourth one is solvency ratios. Fifth one is valuation ratios. Sixth one is growth ratios. Seventh one is market sentiment ratios. Let us try to understand one by one. First one is profitability ratios. Before understanding profitability ratios, let us try to understand what is revenue and what is profit. What is revenue? For example, there is a bakery which sells 1,000 units of bread. Each bread cost is $5 each, and it is selling 1,000 breads into $5, isn't it? That $5,000 is revenue. That is bakery's total revenue. What is profit? Profit, if you know revenue, what is the profit? Profit equal to revenue minus total cost. Revenue minus total cost means that cost may be fixed cost or variable cost. Fixed cost means cost that does not change with production or volume. For example, rent, salaries. Variable cost, that vary with production. Raw material cost may vary, utilities cost may vary. For example, what we are saying, revenue is $5,000. Fixed cost, let me say rent and salaries. In this example, let me assume $1,000. Variable cost, ingredients and electricity, let me assume $2,000. What is profit here? $5,000. That is revenue minus fixed cost plus variable cost. That is essentially $5,000 minus 3,000 means $2,000. That is bakery's profit. Just try to understand what is the difference between profit and revenue. This is elementary thing, anybody can understand. What are the key profitability ratios? Let us try to understand key profitability ratios. Gross profit margin. First, what is profit? What is the use of profitability ratios? Profitability ratios are financial metrics used to evaluate company's ability to generate profit related to its revenue, asset, equity, or other financial metrics. These ratios help investors to analyze and management assess a company's to understand company's financial health and operational efficiency. We need profitability ratios. So these are gross profit margin is one profitability ratio, and operating profit margin is another profitability ratio. And what is this net profit margin is another profitability ratio. Return on assets, return on equity, ROA and ROE. Let us try to understand each one separately. First, let's try to understand gross profit margin. Before understanding gross profit margin, let us try to understand gross profit. Gross profit is the difference between company's revenue. Revenue means what? Sales. And the direct cost associated with producing the goods or services sold. These direct costs are known as cost of goods sold, that is COGS, which includes expenses like raw materials, labor, and manufacturing costs, isn't it? What is gross profit margin? Gross profit by revenue into 100. Let us take one simple example. A company has a gross profit of $2 lakh and revenue is let me say $5 lakh. What is gross profit margin? It is essentially $2 lakh by $5 lakh into 100. That is, your gross profit margin is 40%. Let me say operating profit margin. Before understanding operating profit margin, let us try to understand what is operating profit. Operating profit is revenue minus operating expenses. Revenue refers to the total income from sales of goods or services. Operating expenses means what? Including costs such as cost of goods, salaries, rent, and utilities. That is important. Here salaries also included, rent and utilities also included, but exclude interest and taxes and other non-operating costs, isn't it? That's important. Operating profit margin is operating profit by revenue into 100. Let us take one simple example. In this example, we are assuming operating profit is 1 lakh dollars, and what is this revenue? I'm assuming $5 lakh. It is 20%. This anybody can understand. This is about operating profit margin, isn't it? In similar manner, there is something like net profit margin. What is net profit? Total revenue. Net profit is total revenue minus total expenses. Total revenue includes all the income generated by the business. Total expenses include here operating costs. Total expenses include operating costs, interest, tax, depreciation, and other expenses, isn't it? Net profit margin equal to net profit by revenue into 100. In this example, let me take one simple example. Let me assume company net profit is $50,000 and revenue is let me say $5 lakhs. In this case, net profit margin is 10%. I will discuss about all these ratios in detailed manner in future classes. Let me consider ROA. What is ROA? Return on assets. Measures how efficiently a company uses its assets to generate profit. The higher the ratio, the more efficient the company is at using its assets. For example, what is ROA? ROA is net profit by total assets into 100. For example, a company has net profit $50,000 and total assets, let me say this is an example. If I consider this example, I am getting here ROA is just a simple mathematics, anybody can understand. In this case, ROA is 5%. The ideal value of ROA varies, depends on the industry, company size, and economic conditions, isn't it? What is a general benchmark? A ROA of 5% to 10% is often considered average or acceptable. If a ROA above 10% is considered excellent. That is important, isn't it? Indicating the company is highly efficient in generating profits from its assets, isn't it? Yes, what is ROE? ROE is profitability ratio that measures how effectively a company generates profits using the equity provided by shareholders, isn't it? Net income by shareholders equity into 100. A company has net income, let me say $50,000, and equity is, let me say, this is a number. If you calculate the simple maths, you will get 25% ROE, isn't it? For example, what is the benchmarks? General ideal range is ROE 15 to 20%. This is typically considered a strong and the ideal ROE for most companies. Above 20% is exceptional ROE. For example, let me go to screener.in. Anyway, I will discuss about this screener.in in future classes. If I take ONGC example means Oil Natural Gases Corporation. If you see what is this, what is the values of ROE and this is return on assets. This what is the value of ROE means return on assets? It is 8.81, isn't it? ROE is 16.3. This is ROA. ROA is 8.81, whereas ROE is 16.3. Even you can see the peers ROE, and this is ONGC. In similar manner, if I consider something like Oil India, what is Oil India ROE? 10.34, isn't it? In screener I will discuss about the screener website in future classes. Here you can see this different fundamental analysis related ratios. Even you can see here something like sales. Sales means what? Revenue. 6,58,694 crores. Even what is this? All these things I will discuss in future classes. Time being, just try to understand what is the role of ROA and ROE. They are important in fundamental analysis of a stock. Thank you very much.